Hi, everybody. Good to see you all. I'm Mike Chang with the Chang Collective. We're here today with the most amazing mortgage brokers that we have on staff, which is first priority, Renee Short. Renee, it's so good to have you here today. We also have James Casino as well, who's going to be helping us kind of facilitate the conversation and keep us on track because both of us are super ADHD and get crazy. So, hi, James. How are you?
What's going on, guys? How are we doing today? Renee, thanks for coming on. I know you're
No
busy.
problem. Thanks for asking me.
Yeah. So yeah, we talked a little bit about earlier about kind of state of the market and things like that. I wanted to take a moment to talk about first of all, we're heading into the spring market, and I want to know from both of you guys what uh, home buyers need to be doing now to prepare for all the craziness that's to come.
So we're already pre-market, and we're started up with open houses over the last couple of weeks where we're seeing incredible activity, 13, 15, 20 people coming to these open houses, which is indicative that there's activity, there's pent-up demand, and that people are actively searching. There's been an affordability crisis, there's been an accessibility crisis in terms of inventory in Rockland at least. And so, obviously we're getting super competitive, and we're seeing situations and instances where there are multiple bid offers again, and that's why we need Renee's help in being able to get us to the strongest place possible to win those bids.
You got it. I mean, a lot of what I see is just being prepared up front. I mean, a lot of people are not prepared for what they're actually budgeting for. Are they able to offer more than the house list, right? I mean, and a lot of times, it could be going 50, $100,000 over. So these clients need to know where they're getting this money and that they can come up with the closing costs. They can come up with the down payment and or try to outbeat a cash offer. And that's really the key factor right now. I think, like you said, there's almost 30 people walking through an open house on most days. So when you're looking around trying to see how am I going to outbeat the competition from an agent's perspective, even a mortgage perspective, right? I want my pre-approval to stand out over the competition. So part of that is just bringing the paperwork forward with the strongest documentation and using one of our programs called the Cash Advantage.
Awesome.
Can you tell us a little bit about what the Cash Advantage program is? Because I think most people aren't really utilizing that or don't know about it. So, what is the Cash Advantage
So the
program?
cash advantage for first priority is all about when you have more than 20% down, right? So we will take your file, we will underwrite it as if you're going to the closing table, and we try to get it done within like a 72-hour window. With that 72-hour window, we got to cross all our T's, dot our I's. That means, I really need to see the income, see the assets, know where the money's coming from. Because if that deal ever falls apart, first priority actually does buy the house for the seller. So that's our guarantee that you can buy it as good as cash because it's not a mortgage commitment
Actually,
anymore.
better than cash, to be fair, actually. So, I mean, effectively, it would be similar to the idea of it being not only just a mortgage waiver, but a commitment to the actual execution. There's cash buyers can still walk away from a deal if they choose to walk away from a deal. They may forfeit their deposit, but at the end of the day, they still have the ability to say, I changed my mind. Whereas you're saying that the cash advantage, it's going. It's locked and loaded, and it's contractually obligated by the institution itself. First priority.
100%. And we have 20% down.
Yeah.
Where that cash buyer, if they were buying for $1 million, might only have $100,000 down.
Yeah, exactly. 5, 10%, whatever they want to put into it in
Yeah.
terms of how they negotiate. But that's really a uniquely different approach that differentiates it. It's not just about the appraisal waiver. It's not just about the mortgage contingency waiver, but rather the commitment to actually execute to the end. That is wild. I don't think people appreciate or understand that as much, and that's something that we have to, as agents, tout to our clients so they can understand that that's an added benefit.
Yeah, and I think if you have any clients that are over 20%, getting them in sooner than later because we do go through our process and it really
Yeah,
does
that
make
72
sense.
hours is dicey
Crucial.
because oftentimes these are open houses are shooting over and we are doing highest and best by Tuesday. It's not enough time. If they see the house on Sunday and we're talking Tuesday by noon, by 5, you're not going to be able to have the lead time to be able to get there. You can get up to a mortgage, you can waive the contingencies, but it's not going to give you the guarantee that they'll close on the deal. But there's got to be some sort of contingencies from first priorities perspective in terms of safety or things that happen in the house. What happens if the house gets damaged, right, along the way?
So we do give ourselves a little clause for title, right?
Or
You have
use
to.
violations
Yep,
or
we are
issues.
protected by title, and that's really it. I to go off. I mean, job, and or you can have a customer that dies. First priority still has to buy the house.
Right.
That's our
It's
guarantee
more
is
so
to the
buyer.
seller.
Yeah, exactly. The buyer is more the variable that has to be kind of walked away from. That's great.
Right. Where our guarantee is to the seller. That's
Yeah.
why you take our deal over a cash offer because we're a guarantee.
Yeah, it's actually a guarantee. You know, it gets mixed in so much that you kind of think, you know, everything's a money back guarantee here or there, but it's an actual guarantee to close on the house, and that's huge.
Yeah.
And look, the chances of us closing and that happening and anything going south is very slim.
I'd love to see the stats. I would love to hear the stories.
Very rarely
That's
have
the
we
next
ever.
podcast. We should be like, and then we got this.
It is. It's really very minimal. So listen, we cross our T's and dot our I's. So we make sure that we give the cream of the crop and we, put ourselves out there for the buyers that believe.
What are the
deserve it.
restrictions and considerations given the extensive amount of risk that's being taken on that they review? Is it strictly just based off of the comps that you're seeing and the appraisals that you're seeing on the property itself? Is it a financial equation, or do they have physical appraisers, inspectors go to the property and review it?
Nope. So what we do is at a 20% down, we also qualify them on 10% down and 5% down. So quick formula is if you have a buyer that's buying an $800,000 house and putting 20% down, we also qualify them. And God forbid that appraisal came in 10% short.
Got it.
Right? So if you are naturally a 20% down buyer and you now are only a 10% down buyer, we make sure you qualify for that.
Got it.
So we don't change your loan amount, but we pull from your loan to value, right? So the only difference that really happens, a buyer doesn't have to come out with more money. A buyer doesn't get stuck with a higher loan amount. All they do is get stuck with that little PMI insurance.
Got it.
And for people that have really high credit scores, even on 800, I mean, a PMI insurance with someone over 780 credit score or 760 might only be $130. So
Wait,
it's
is
a
that
no-brainer.
month or is that
That's a month.
year? Exactly.
That's a no-brainer
That's
for
crazy.
somebody to say, hey, this house just came in $80,000 short, and this company can still protect me, and I can still close with the same monthly payment. It's only $130, and I still won the offer. That's great.
Walk me through that one more time. I got lost. My eyes crossed.
Yep, very simple math.
This is it.
So we have an $800,000 purchase,
Okay.
right? So 20% is $160,000.
Perfect.
The house only came in at $720 value.
Okay.
Where's my buyer coming with the other $80,000?
Okay.
So instead of putting 20% down, we only put 10% down on the 800.
So you're
Now I
taking from
only
the
need
deposit,
60,
and you're going to make sure that they're covered for a 10% cushion on that.
and they
That's
still
great.
qualify monthly payments because the only difference is that PMI insurance.
Makes sense.
That's the only difference because the loan amount is still the same.
Right.
It's just the loan to value that actually changes.
The loan amount is the same. So even if the appraisal comes in lower, and just walk me through this because again, I'm not a mortgage broker and I want to learn, right? So if it comes in appraised, 10% lower, if it's appraised 10% lower
At 720.
at 720, the bank still loans out full amount to the 800, or does it only go up to the it only goes up to
The
the
bank
720?
will only lend you the lesser of the two.
Right.
Appraised value or purchase price.
Right.
So now you go off of the 720 with 10% down.
Got it. Because then you're just paying cash to offset the other balance.
Same loan amount.
The same loan amount. Got it. Wow. I was like, that's.
It's
I could never be a mortgage broker.
Well, that's why we
I
have
was
her.
like,
Yeah.
I was like,
I don't want to
I'm
do this
gonna-
type of math.
She
Yeah.
says the words. I watch her mouth
Right.
move, and I'm like, I know she's saying English, but I was like, whoa.
It's amazing. I mean, listen, I've saved some really great first-time home buyers on that way of structuring it that
Right.
way as well,
Right.
because they can throw in an appraisal gap. Forget the cash advantage. Talk about just an appraisal coming short for anybody that wants to win a bid and their first-time home buyer, and they only have 20% down, and they don't have family to get gifts from. So where do? You just move the dial. Instead of putting it 20% down, you're already in contract.
Yeah.
Now you're at 10% down. Who cares as long as the money still shows up at the table?
Yeah. it's
The
true.
monthly
Dream,
payment
dream.
hasn't changed. Loan amount is still the same. The only difference is instead of borrowing 80 LTV and no PMI, I'm at 88% loan to value, and I'm paying PMI on that 8%, which is pennies on the dollar to keep that offer alive and to win that bid.
Got it. So I mean, in terms of when we're negotiating as agents with other agents, when we're about to present the offer, it's important that we're consistently engaging with our mortgage partners to be able to give them a couple of different creative options, right? Like we have to be able to think about different scenarios ahead of time and be able to plan for it because it does take time to move the ship, right? It does take time for them to run the analysis. So if we all walk in lockstep, we're better to quickly react and show that sense of urgency.
Yeah, I think that that's a good point. I mean, what I see, what I'm learning over time is I think that what separates the great mortgage brokers and agents from just the good ones or the bad ones as well is like your ability to be flexible in these situations. And then there's only a few. And then also to just have like awareness of where to pull the right levers in all these different situations, because there are a lot of options, and I guess not being aware of those can be the difference on whether or not you're able to, someone's able to buy a home or not. One thing you spoke about was like those first-time home buyers. I think in Rockland County, that's one of the largest subsets of clients that we help. I was wondering, besides those options that we just discussed, is there any other advice you'd like to give to like those first-time home buyers? Because again, they're one of our biggest subsets of clientele.
So James, you and I talk about stuff like this all the time, when we're working with clients. And I think one of the biggest things that clients don't realize is know your area,
Mm-hmm.
right? You want an agent to find you the right house. You as a buyer have to understand what your budget is, right? We need to know that different zip codes and different areas, Hudson Valley is Hudson Valley, New York is New York, but we are right in the middle. So we get buyers all the time saying, I might go to Connecticut, I might go to Jersey, I might go to Orange County, I might go to Westchester. I really don't know. I'm looking everywhere. Well, that's a waste of everyone's time, right?
I agree. Ish. I don't know.
I like this house in Greenwood Lake. Can I also see the one in Bergen County,
Right,
New
right, right.
Jersey?
Those are exactly, and that's kind of the journey we have to go through with these first-time home buyers in terms of cycling them through the notion of driving through the towns, doing some of the pre-work ahead of time. Because again, it's not we need to be snipers, not shotgun guys. We need to be able to act quickly. But I mean, it's part of the iteration, part of the training, the learning, and the things that we do as the agents to help kind of get them tied together. But yes, definitely
So,
functional.
with that said, what I do with a lot of clients, like I had one just yesterday, matter of fact, and they said to me, I'm in Rockland, Orange, or Westchester. And I said, well, those come with a lot of different scenarios, right? You have different closing costs,
Right.
you have different taxes, you have different
Yes.
price points. So, a lot of it's not a matter of the house, it's what's your budget.
Yeah.
How much money do you have to work with?
Right.
How much can you spend on a monthly? Let me help guide you to show you in Orange County what that budget is. If you wanted to go to Jersey, what a house in Jersey looks like under that same budget, because you and I both know that
Right.
monthly payment is different for all those areas. If you tried to buy a house in Westchester for $500, you're gonna have $15,000 in taxes.
Finding one, I was like,
That same house in Rocklands would be, a lot more. So well, I think I went to Orange to go the other way, but you get what I'm saying is that prepare your zip codes, know your programs. Every first time home buyer, everybody wants help, right? Everybody wants a Sony May program. Everybody wants grants. It's so important to know your income for the zip codes and the areas. All create different grants and different programs for those first time home buyers. So what you can get in one county isn't always what you can get in another. And it's really important to know that and to teach not just the buyer, but the agent. When you're looking for those homes, hey, if you're going to look in Jersey for a client, you need to look at these numbers. If you're looking in Rockland County, you have to be looking at this purchase price with these numbers. That's all very important information, and it'll save you time working with your buyers, not looking at every house just because they think it's pretty.
right.
Right. I think that a lot of the times people ask the question of why is it so important that you work with somebody with why is it so important to work with the local mortgage broker, right?
Local's the most important, I can say. Could I tell you I do Florida? Of course. But am I the expert? No. You could still call me for Florida. But
I know. I'm gonna call you from Florida.
but what I mean is, I feel confident
Right.
in my numbers. I
Yeah.
could
You do them all
quote
day, every
closing
day.
costs off the top of my head, and that's what brings my strength. Is
Yeah.
that I'm confident in what I offer, and I know my
Absolutely.
numbers. So when someone says and I say this often, that I have a client that has $500,000 at the end of the day in their bank account after they close, and I have other clients that only have 500 left in their bank account when they close. And I want to give every single one of them the best service for them to understand the numbers up front before they even sign a contract. I want them to really be fully aware what it's going to cost out of pocket monthly and total out of pocket closing costs and down payment.
All right. What is it in Rockland? 3, 2, 1 on the spot. Go.
Three, two, one. Buy a $500,000 house.
Yes.
A year's
let's
worth.
go. Can we do it 650 so I can
Let's
do
go
that?
650.
I'm just fucking.
Perfect.
All right. I was like,
No, look, we'll be
easy math
realistic.
because nobody wants to do math.
Easy math. We can do 700,000,
Perfect.
right?
Because that's where we're going, right?
Let's go 700. I'm even going to give you a 10% down buyer,
Awesome.
right?
But not a 3%. No, we don't do the 3. Well, it's like exactly. We try to avoid that. It's not going to be as impactful. Why wouldn't we go? Because not many people are going to accept it in terms of the sellers don't feel as comfortable with the low down payments in terms of its ability to close, right?
We want to be as strong as we possibly can.
Right.
Look, you and I know that the 3% down buyers are going to have slim pickings.
Yeah.
Right? They're going to not be buying now. They're
Yeah.
going to be buying at the end of the market because all the people with 20, 30, 40% cash buyers are going to win those bids first.
Yeah, I'm sorry. Can we take a time out there actually? Because we always, I think if you look on, if you're in the sphere of real estate or investing TikTok or like not just TikTok, but just like social media, even like blog posts, whatever, right? One of the things that you'll see is you can buy a home, take 3% down, and of course it's possible, right? I'm not saying that that's not something that does and can happen, but like compare and contrast, right? Like what about only having that amount of money makes it harder for those people to win out on deals?
Skin on the game, bigger chance of opportunity. If it is the only thing that they can do, that's a red flag, right? Because then if they can only put 3.5 down, anything changes, right? They lose their job or something happens with regards to taxes were miscalculated. You know, there's all these things that can happen from the seller listing side guy's side that would be a flag. So we'll of course call the mortgage broker to find out whether or not this is just a play to save money, which is totally understandable. You know, the least amount of interest you have to pay. I get it. You know, I would do the zero down if I could do zero down. Not a VA. I tried to get in. They don't want me. I'm too old. But you know that notion is logical from the perspective of that, but also shows a certain amount of concerns from a perspective of having enough skin in the game to actually show that there's a ability to execute and close. I mean, that falls on the agent to then kind of verify more of that stuff. But from the mortgage side, I'd love to hear her perspective.
So it's funny that you asked that, James. So many years, I mean, FHA was like taboo. VA buyers were taboo. Like they're scary. They have no money down, you know? I mean, look, just in Rockland County, just in closing costs, you need 5% down.
Yeah.
So, you know, 5% on a $500,000 house is $25,000. So my VA buyers put that up front as good faith on a contract. But look, they have to be the only buyer because somebody else behind them could offer $5,000 more, 10% down, and outbeat them. Less risk, like you said.
That's right.
So FHAs and VAs were always a problem. We've turned that around over the years. We've taught the agents that it's, you know, there's ways FHA and VA, they're not sticklers, right? They're really not. We can get around
what about
it.
the habitability and the walking stairs?
Yeah, I always say it's all about the toxic or the hazardous. At the end of the day, you got to let a 3-year-old run around the house without falling off the deck.
Right, which is responsible anyways. Like if you have kids, why wouldn't you want them to be safe, right? Like why wouldn't that be a thing? But, you know,
And that's what the banks want. The banks want a first-time home buyer to walk into a house and not have to worry about having issues or spending more money on fixing any major issues. And so toxic and hazardous are really important. So it's the younger 3-year-old and it's also the 80-year-olds walking around as well.
Yeah, absolutely.
We're talking about the ones that can't get up and down and the ones that need walkers, but they need railings. You need to be able to walk down the basement. You need to be able to walk up to a bedroom and be safe. You need to have proper, COs. Let's put it that way. So,
and if it's going shady anyways, you're going to go all cash, and it's going to be that way. So
I just think those
by shady, I mean that if
clients-
it's a challenging situation, which oftentimes they can be in terms of it being fallen in disarray or whatever challenges there are, then there's a different approach from it altogether. But in terms of the typical first-time home buyer who needs to get into a relatively easy setup, move-in ready kind of situation, it's in correlation or in parallel with what's being asked for anyways.
Yeah.
So it's just to look out for the consumers themselves, and I think that's not a crazy idea. That also.
And we're getting tighter and tighter. Listen, we're tighter and tighter. I mean, even your conventionals are start going to take care of property disclosures and taking care of properties and not just as is isn't going to always be the future.
No.
We're going to have to start taking care of our homes and we're going to have to start selling these homes and taking a
The
reasonable
insurability too. Let's talk
Correct.
about the insurability of it because I know, obviously, nationwide there's concerns about insurance and how it's impacting. What are your thoughts with the insurance component of the mortgages and improving running through?
So I think insurance is going to be nationally across the board a different world, right? I think that they're just going to inspect these homes. Insurance companies are going to have to start going into these homes up front with
We had in the
drones.
past too, exactly. So
Yep.
it's not too different, but it just feels like now it's starting to become more pressing.
They may want the
issue.
appraisal.
Yeah, right.
They may want an appraiser to, they are a licensed appraiser walking in there saying, yeah, I went through that roof. I went through the attic. There's no leaking. I went into the basement. I smelled no mold. There might be these next steps that we may have to do, and they're inspectors as well. We might have to hold our home inspectors a little bit to a higher regard to be able to answer some of these questions that we know could be visible. As agents, we see things,
Yeah,
right, up
100%.
front, and we have to be smart for not only our sellers but for our buyers as well, and let them know what could possibly happen, and make sure that they either take care of it or we bring it up to the inspector that the homeowner is fully aware.
Right, and we're absolutely already providing pre-inspections for our listing sides, for our buy sides. Obviously, they're operating in the same capacity, but as much of a advance notice information you can get ahead of time, you can avoid pitfalls that may pop up later on. There's nothing worse than getting through, thinking that you're done, and then hearing out right before closing or like 2 days beforehand that we need this documentation, and the stress levels are already through the roof. And so, as much as we can kind of get ahead of that, the better off the whole experience is, because we want to make it like a fun and enjoyable and exciting experience versus like a trudge through a trail of tears and headaches. So.
And again, that's part of getting in early and making sure that your mortgage broker or banker really has everything up front. And sometimes just that 1-800 phone call doesn't work.
No,
they don't ask the right
Rocket
questions.
doesn't know. I don't want to talk about any specific ones. We can edit that out, but the larger nationals don't have the same level of hyperlocal understanding that can be the things that trip up deals, right? So.
And that's kind of one of the other questions that James and I were talking about earlier about being self-employed.
All right, so let's talk about this.
Yeah.
As independent contractors, we obviously make a ton of money, but we ebb and flow in terms of our consistency. What are the requirements? How do people who have left the workforce over the last 5 years to start their own small businesses react and prepare themselves for home ownership?
So never in all of the world have I seen so many independent contractors at such young ages. Right?
See?
I mean,
a lot of TikTok impact, right? I was
it's
listening to TikTok.
amazing on the money that's out there and the things that we don't need to do 9 to 5 anymore.
Yeah,
right?
exactly.
And we're experts, and we are out there selling
So
ourselves,
many
not the
influencers.
companies. So how does that impact buying a house, right? I mean, clients are making money, agents, people are making money, but how does that actually let you buy a house, right? You need to
Right.
actually file tax returns.
Ooh.
And so that's
hate
the big
Adulting. That
hiccup.
sounds like adulting.
No, I hate
As an
adulting.
influencer, I don't know if I want to hear math, work.
So I'll give you a really easy scenario. I had a woman that went to college for 4 years, graduated college as a nurse, and a year ago she started doing social media. And when I tell you she's making 6-figure deposits into her bank account every
Deposits,
single month.
multiple deposits. That's legit. You'll tell her my name. I'm Michael. I was like,
Well, think about it. It's 1 year. She's only been doing it for 1 year.
Yeah.
So she's only filed 1 year. She's only filing right now. She was signing a contract to buy almost $1 million house and has never filed a tax return
Well,
on
how-
the income she is actually
Yeah.
making today. So if that agent didn't send her my way because she was running around with a different pre-approval and no one actually asked the right questions.
Right.
So now the agent transferred him over to me and I'm going, wait a minute. You never even filed income on all this money. You're going to owe taxes.
Yeah.
Not only
Exactly. So it's so funny how quickly it goes down from like 100 to like $60.
Well, that's exactly what happens.
Exactly.
So, we were able to calm her down and we're still buying the house, but it was the sticker shock that she had to go talk to an accountant.
Right.
Because we only had a certain amount of money in her bank account. She went to the accountant, and this person made so much money in 1 year. Let's call it $700,000 in deposits, right? For 1 year. Never done this before in her life. $250,000 is what she had to pay the IRS.
I feel slow. I was like, good accountant.
Well, her accountant did send her home and said, maybe you should come up with some more write-offs. Do you have more write-offs?
I was like, you can do more.
Which is the big problem, right? So this woman can make $1 million. Everything is great. But at the end of the day, when she files her tax returns, what's going to happen? That money and that number is going to shrink. Does she still qualify for that same house?
Does it make a huge difference from a perspective of mortgages from people who've created LLCs, S corps, or are doing independent contractors, 1099 improvements? So if you own corp, do you issue yourself a W-2, and does that impact the analysis, or do they just what's the structures that?
So everybody's
that
different,
I know,
right? I mean,
I was like,
sometimes
so
you have
many
someone
different
that's
things.
self-employed, files with a Schedule C,
Right.
LLC internally with their personal. Sometimes they have S corps, they pull themselves a W-2. But listen, nothing's ever anything without an average.
Right.
So you can write all you want today. You could say, you know what? I'm Michael. I'm writing myself a $100,000 W-2 out of my business this year. But last year you only did 50.
Right. Fair and reasonable. Right. It changes and it's addressable. So the question then is if you were if you were a independent contractor. Now this is like a specific. I'm asking for a friend. I was like, and that friend happens to be potentially myself. So what I want to know though is if you're an S corp, right, and you pay yourself a fair wage, you know that you have significantly more. Are you limited then, therefore, for it to be having to be purchased through the company or then through yourself based off of the W-2s?
So two-part question, right?
All right.
So
I know this was a super nerdy. This is like a two-part question.
as an LLC and or an S corp, you
Yeah.
can only buy a house as an
Or trust.
investor.
Yeah.
As an investor,
Right.
right? So no bank out there will let you close on that unless you're treating it as an investment.
Got it. So
Right.
different type of loan altogether, not your first-time home buyer loan, not your Fannie, your
Correct. It's risky buying houses in
So
LLC and
your
S corps from a
interest
bank's
rates-
perspective.
interest rate changes significantly.
Goes
How much higher? Like 2% higher? 1%?
No, I mean, look, at the end of the day, if I was quoting interest rates today, let's call it 6.25, that same client would probably be a 7.375.
Got it.
And maybe some points attached and maybe even a prepay.
And is
Those
there
hedge funds are pretty hefty.
Yeah, they rock hard. And so my question though also then is that when you marry your data rate, that only applies on personally. It's not going to change for the investment style, right? You're not going to, or do you see that there's going to be? Can you restructure once you've owned investment properties?
Always
like
can refinance.
Always.
Always
Got
can
it.
refinance.
So is it within a certain time frame, 5 years, 6 years, and then it doesn't make sense?
You have choices, right?
Alright.
So sometimes there are prepayment penalties, which keeps that interest rate low, right? So it's like a 5, 4, 2, 3, 2, 1 scenario on a 5-year prepay. But if you don't take the prepay, maybe you're at 7.875, and now you can do whatever you want, right? For people that are looking to flip properties,
Right.
that's a prime example, right? I'm created an S corp. I'm taking this property. I'm going to flip it in 6 months. What's my best way to do it? They don't care about the low interest rate, right? Because they're only going to keep it for 6 months.
Yeah.
So that 7875,
Sure.
they don't really care. It's part of doing business. So at the end of the day, it's all a matter of what your net number is after you sell the house. It doesn't matter the interest rate. As long as you got to close as an LLC or an S corp, that's the key because that's what your accountant or your financial advisor wants to hear.
Can you buy it in your personal and then immediately transfer title to an LLC right afterwards?
You can. You 100% you can. And I kind of ask clients that up front. Why are you doing it with an LLC? But accountants and financial advisors are trying to help them just save money and do it up front.
Right.
Because it's not going to matter. It's only going to cost you more money to transfer it later.
Yeah. Got it.
Cool.
I know you got more questions, and I don't want to drive it off the top of mine.
No, we're good right there. I think that
Let's make millions of dollars, guys. Other things that I would be interested in knowing about: pitfalls for first-time home buyers. You don't realize this. I watched this happen with one of my clients recently. So we can go like horror stories.
No.
I specifically slammed on the table because he explicitly told me not to. And as a rebellious soul, I have no choice but to do the opposite of what you tell me to do. I apologize for the listeners for the slamming that happened, but it's what I do. All right, so.
I have an answer for you already.
All right, go ahead, shoot. You got
So the biggest thing I notice right now in this trend is, look, in 2023, a lot of us made more money in 23.
Yeah.
And then we made less money in 24. And now here we are in the first quarter, and we're making, we're still building for the year, right? So what happens when you apply for a mortgage? When you have declining income?
Oh, so the trend matters. It's not,
trend
just the
matters.
average is a static. It's an actual percent delta that impacts.
So what happens is this is why you have to be so detailed in getting a proper pre-approval, right? And getting that paperwork, the 2 years reviewed in detail. Because look, quick math, $100,000 in 23, $80,000 in 24. Now my year to date is trending at 70,000. From a lender's perspective, they're going to use the path of least resistance.
Yeah.
So I can only give you credit for the year to date.
Got it.
Forget what you made in 23. There's no averaging anymore. opposite when you're declining income, and people don't realize that
You
they're
should be
declining.
planning 3 years in advance to buy a home. It's basically what we're telling you. If not 10. I don't know. I was like, as far as you can, the better it's going to matter. And in fact, it does matter to look out that far because you want to, if you're talking about, people who have independent contractors slash self-employment, right? Like it's part of being an adult and running that whole business. You need to know all the other pieces and look out further that way.
Michael, you'll laugh. I tell my clients right now in this market, we're in March, who's
Yeah.
filing their tax returns?
Right? Everybody's exactly. Well, they're extensions all day long.
Well, a lot
That's
of people
me.
are actually filing
This is
pretty
it.
quickly these days. Even the self-employed guys, and I say, don't file those tax returns without showing me the draft first.
Yeah.
You can't go backwards.
Can't go
And
backwards.
so
Once
if you're
it's
looking to
locked
buy a
in.
house, now's the time to have those tax returns reviewed.
Correct. That's actually a very, very important part that I think that many of you out there should probably be aware of. Also, cars. Well, you should be paying the car. The car is the worst. This just happened to me, and it made me nuts because the guy. Well, it wasn't his fault. He got into an accident and had to get a car. He got a car that was still a lower price than the actual previous car in terms of a monthly, but the execution that triggers and having to show all the new line credit up and all of that stuff, right?
Shame on you. I didn't know that client.
It wasn't yours.
I'm going to tell you. I'm right. I'm telling you, I would have told you how to fix it.
Wait, how do you fix it?
How do you fix it? How much is it to rent a car for 2 months?
Ooh, that's
Why
a
would you go buy a car when you
No.
can spend
The
$600 on
insurance,
renting
though,
a
right?
car for
And
2
then
months
write
from
that off the
Enterprise?
insurance. Exactly.
You rent it from Enterprise, you have no hit on your credit, and you still get to close.
I know. It's crazy talk.
You don't buy a house just because you crashed
to
the
be
car.
fair,
And don't buy a car because you crashed the car.
Exactly. I was like,
Wait
people
until you buy
freak
on the
out,
house.
and they're like just trying to survive. They're shocked. So, us getting that out there ahead of time. So if something happens to your car, everything that happens in your life for the 2
Talk
months
to
that
your
we're
broker.
working, you talk to us, right? Change of job. Do not change jobs, right? Like, let's keep everything tight. Don't go crazy on Amazon spending, right? I was like, these are all kind of like.
And know who
key
you put
bonuses.
on the application.
Yeah.
I mean, that's a big one.
Yeah.
Know who you're partnering up with.
Yeah.
As far as when you're buying a house, know who you're buying it with.
Lisa, I trust. That's my wife. I was like, she's a loose cannon. I don't trust her. I'm just kidding.
But right now, you have a lot of investors. It's a lot of guys and gals buying homes that are investors, and they have partners,
Yeah.
right? So, just like a marriage.
Max amount of partners you can have.
4.
Okay.
4. Unless you create an LLC, and then it doesn't matter.
Then it's unlimited because it's its own separate entity.
Yeah.
Trust versus LLC versus S corp. Anything to note in terms of differences?
Each LLC has to be in the same house. So if you're buying a house in an LLC, that house could be the only house in that LLC.
Yeah.
So each LLC has to match a house. So just name it the address. That's what we tell you.
Excellent. Have you bought a house yet? Are you thinking about buying a home? James?
Well, now I guess I have to.
James is our human example.
Yeah, well, I guess I'm gonna have
That's fine,
to do some preparation. I don't know if my tax returns are in line of where they need to be, but maybe we'll
Well,
talk.
yeah, we're gonna
it's-
talk, well,
it's
over the last
so-
3 years. You've
yeah.
had 3 years of actual average
it's true.
increasing. So I mean,
It's true.
This might be the time to start looking at
Yeah.
options.
And
Absolutely.
James, just like for someone like you, you talk about it now to
No.
close in 26,
Right.
right? Because
Right.
what you do now affects you when you're buying in 26.
Yeah.
That's why it's so important.
Make good decisions.
I try. It's hard when I'm running around with
You
you.
know what? At the end of the day, it's not a matter of making any decisions on buying. It's a
Right.
matter of knowing your budget.
I'm talking about life
Right.
decisions in your
Budget.
credit and making sure that you're not overextending yourself, missing payments, anything that's going to impact that credit score because that credit score in the initial times is such a huge impact. And then, of course, it's obviously good habits and habits. Other questions that I have before we leave. What are your? We're going to fire out because I know that
Go
we're
ahead.
running out of time. All right, top 5 questions I'm going to ask you. One, what's your favorite food?
Chicken cacciatore?
Oh, nice. If you could be an animal, what animal would you be?
Oh, goodness. I'm going to have to go dog.
All right.
I have 6 dogs. What am I going to do? Have to go with the dog.
Who's your favorite? No, just kidding. Superpower. What superpower would you have?
Miracle worker.
Oh, nice.
I
You
can
are.
fix
that's
problems.
That's already you.
That's so good.
And that's what gives me my drive. I love fixing the problems.
Last piece of advice that you would give, the single last piece of advice you would give to someone who's interested in becoming a mortgage loan officer.
Have a mentor first.
Excellent, right?
Learn, because trials and errors will ruin you.
Yeah.
You can't get into this business and just go by the book. It doesn't work that way because no deal is ever the same. And so having the right mentor to grow your business is the most important.
Excellent. Well, it's been such a pleasure. I appreciate your time, and we look forward to closing so many more deals with you.
Thank you so
Cheers.
much.
Take care, Renee.
Bye. Thanks.